This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Occasionally he asks, which are capital rationing, replacement, and lease and buy. Now I say they're not very common, and in fact he hasn't thrown one in since the change of syllabus, so he might well this time. Let's go through them, or at least I'm going to go through two of them. I'll go through capital rationing and replacement. I'm not going to go back through lease buy. It's by far the least likely of the three. Now, if you want to be 100% certain, look back at the notes. But if he does ask one of these, it would almost certainly be capital rationing. Just possibly replacement. All right? How about I'm making some sense here? None of them are often. When he does ask one, by far the most likely is capital rationing. And so, first of all then, capital rationing. Let me remind with a quick example what's happening in the approach. And it's very much your own rules, my friends. Below are the expected cash flows for each of three projects. I've kept them very short, they only last 2 years. I've given you the actual cash flow. Again, in a real exam, he could have you work out the cash flows like you've been doing, albeit if it's one of these, it would be easier. Also, I've given you the net present values. One or two times he's given you them and used his figures, more likely to make the question a bit longer. You'd have had to work out the NPV by discounting. All right? So we've done enough of that. You can practice again shortly. But I hope discounting itself wouldn't cause a problem at 10%. However, assume my figures are right. I did actually manage to get these right. So don't waste time checking. I've asked half of you before, but all of you, please. If the question stopped there, forget what's written below. If all I said is here are three projects available to you with those MPVs, what would you do? What would you do? Here are three projects. If there's no other information, what would you do? Yeah. Don't read things into it that aren't there. Before we read the last few lines, if I gave you three projects, if I gave you any number of projects, if there was no other information, the company would do every project that had a positive net present value. Here they are all positive. You would do all three projects. I didn't say you can only choose one or anything. The company will do every project that's positive. They would do all three. Okay? And I'm not wasting time. On several occasions, Part A has said, here are three projects, what will you do? The answer is do all three. Finished. So, yeah. The problem, of course, when you read the next lines, it says there is only 8,500 available for investment at time zero. We've got limited cash available, and it should be fairly obvious immediately. We can't afford to do all three. To do all three in full, A takes 2,000, B takes 5, C takes 3. You would need, 10,000? I hope, obviously, with only 8,500 available, we can't do all three. Well, all capital rationing means is that we've got limited cash. So what I asked you a moment ago, when I said if there was no other information, if there was no capital rationing, and don't waste time unless he asks for it, but if there was no capital rationing, if you got as much cash as you wanted, you would do all three projects in full. All right, I've said enough there. I hope that's obvious. However, the question proper, with capital rationing, I'm not going to write a definition of the word. If you didn't hear me, you better shout. With capital rationing here, only 8,500 available. Clearly, we can't do all three. The question is, how should we invest the money to make the best net present value, to make the best use of it? All right? And remember, there are two possibilities, and read it carefully. First of all, and it's exam wording, it says part A, the projects are infinitely divisible. I say it's exam wording, learn the words. But what we mean by infinitely divisible, however unrealistic it may be, infinite divisible means we can do any fraction of projects. So I say, however unrealistic, here is irrelevant. If we want to do half of project A or 80% of project A or whatever, no problem. Okay? However, the one limitation that goes with it, although you can do 10% of A, 20% of A, etc., you are limited. It's a maximum of 100% of each project. So it's any fraction of project A up to 100%. You can't do 2 of project A or whatever. Is that clear? Well, if it's infinitely divisible, it's easy. I'm not going to waste time chatting. It should be fairly obvious, the logic of what I'm going to do. To decide how you're going to invest, you take the NPV of each project. Here it's given. Again, you might have to calculate. But the NPVs, A is 760, B is 1600, C is 1340. We want to end up with maximum NPV, but just because B is the highest here, it doesn't mean B is best. We need to take account of how much cash we need to invest. So the cash at time 0, the investment needed, A needs 2,000, B needs 5,000, C needs 2,500. It's Monday morning still. 3,000. To decide on the best use of the limited cash, we simply work out for each project what the NPV will be for every pound invested. The NPV per dollar invested. A needs 2,000 to yield 760 for every dollar invested. Check me, but I think 38 cents. B gives us 1,600 from 5,000, which is how much? 32 cents? Is it 32? And finally C, 1,340 from 3,000. I need my calculator. Is, I think, 45 cents. Am I right? That's the NPV per dollar invested. And so the best use of the limited dollars, C is high, C is best at 45 cents a dollar. A is second best, B is third best. Now we can decide how to invest. We've got 8,500 available. You'll go to C first. You'll invest as much as you can in C. The limit's on you. Obviously, you can't invest more than 8.5, but also remember, obviously we can't invest more than 8.5, but in each individual project, the maximum is 100%. So the most you can invest in C is 3,000. So project C, you'll invest in all of C, and the investment, therefore, would be 3,000. The NPV you'll generate, you're doing the whole project, so you'll get 1,340. We've still got plenty of cash left. You can't do more C's. Go to the next best, which is A. And again, we've still got plenty of cash, but the amount, the most we can invest is 2,000. You'll do all of A, invest 2,000. The NPV you'll generate is 760. Is everybody with me? And you'll carry on one by one until, of course, you run out of cash. So here, fairly clearly, we've already used 5,000. There's only 8.5 available. And so the balance left, you've only 3,500 available. You can't invest in more A's. The next best was B. To do all of B, it'd need 5,000. We can only invest 3.5. And so, I think fairly clearly, it'll be 70% of B. And as a result, the NPV you'll generate will be 70% of 1,600. Or if you prefer, it'll be 32 cents for every dollar. At 32 cents per dollar, the NPV from B will be, I think, 11.20. And therefore, that's how you invest in the projects. And the total NPV resulting. Has anyone checked me? I get 3,220. And I hope clearly enough, but that is the maximum NPV. Invest in any other way at 8.5. Any other way of investing, the NPV would be lower. All right. Now, arithmetically, it's easy enough, but is everybody clear of the logic? Don't just learn a rule because it's there, but it is very much, it's got to be automatic. Calculate the NPVs if they're not given, work out the NPV per dollar, and then follow through the way I did. Okay. Two things before I leave part A. One is just a bit of terminology. Your examiner, don't think has ever mentioned it, I may be wrong. The previous examiner did. Just in case though, can anyone remember what we call that NPV per dollar invested? Well, I won't waste time. Sorry? Well, I'll tell you. You don't need to use the word, but just in case it's ever mentioned, we call that the profitability index. Which is actually a bad word because we're not looking at profits at all. I say you don't need to use the word, but if the examiner ever said what's the profitability index, that's all it is. All right? You can, in fact, measure it slightly differently, but that's the standard one. That would always get the marks. Okay? Secondly, although I'm not going to write an essay on the screen, it should be clear enough. For a written, if you were asked what limitations are there about your decision, well, of course, you've got all the normal ones that the cash flows are estimates, so your NPV could be wrong. But what's the, I hope, obvious extra limitation of what we've done here? Why, in real life, is this unlikely, to be honest, to be much use? Anyone tell me? Our answer is that you'll do all of Project C, all of Project A, and 70% of Project B. Why in real life? There may be times that's relevant, but in real life I think that's rather likely to be rather silly. 3 machines here. Say again? Yeah. I'm not sure there are that many projects I can think of where you can say, oh, I can't afford to do all of it, I'll buy 70% of this machine. You know, there may be times it's relevant, but I think you'd accept it's likely to be unrealistic. Can you do 70% of a project? Would you agree? And, without going on, even if you could do 70% of a project, I think it would be remarkable if it actually earned 70% of the income, and if you actually got 70% of the NPV. You know, doing half a project is likely to be less than half as worthwhile. You see my point? Mm-hmm. Okay, but in the exam you do what you're told. If it's infinitely divisible, there we are, and that's it. You could have any number of projects. He's unlikely to have more than 3 or 4. The way it obviously takes slightly longer is probably have you do the NPVs first, but then applying the rule is unlikely to be any harder. Finally, though, quite likely, obviously only do what's asked, but quite likely is that he'd have Part B as well. Part B, same problem, we're limited still to 8,500. But it says the projects are not infinitely divisible. If they're not infinitely divisible, it means quite simply, each project you either do all of it, or you do none of it. All right? You can't do fractions. Well, here, there is no special technique. There's no quick way. The only safe way of doing it is to list all the possibilities. What I mean is, with those 3 projects, you can do all of A and all of B. That would use up, what, 7,000? But, of course, you wouldn't have enough left to do C. You agree? Alternatively, you could do A and C. We can afford to do any 2 of them, but we haven't enough to do all 3. Alternatively, we could do B and C. You all with me? So there, I've got every possibility. You can afford to do any 2 projects, but not the 3rd. Well, as I say, there is no quick way, really. It's simply working out, in each case, what would the total NPV be. So it doesn't take a moment. If you do A and B, the NPV is 760 from A, 1,600 from B, which is 2,360. If you do A and C, A gives 760, B gives 1,340, 2,100. Is that right? And finally, if you do B and C, 1,600 plus 1,340. Is it 2,940? Well, our object is to get maximum NPV. As I say, there's no quick way as such. List every combination that's possible. Whichever gives the highest is the best. And so here, the highest is 2,940. You would do B and C. Now, 2 little things to say, but I think arithmetically that should be clear enough. Everybody? All right, 2 things. One is that I'm not stupid. It's just my face. Quite often it may be fairly obvious, oh, B's better than A or something. But it's up to you. In the exam, be safe. In the exam, you know, things often look obvious when they're not. I think you know what I'm meaning. Don't just sort of jump to the answer. To be safe, it doesn't take long. I really would list them all. You do it in your head, it's when you're going to do something stupid. All right? So that's trivial. The other thing doesn't affect your answer, but he just could specifically ask you, you know, that's right, there's your answer to part 2, B or whatever it was. He could specifically ask you this, though. If you invest in B and C, how much have you invested? B took 5,000, C took 3,000. The total investment is 8,000. That's no problem, obviously, I hope. However, the amount available was 8,500. And what he just might ask you is, all right, do part B and there's your answer. But what's going to happen to the other 500? With 500 spare. What happens to the other 500? We can't invest in C, obviously. A, because we can't do fractions. You could put it on deposit, however, that effectively would be an extra investment. You know, if I added on an extra investment D, you can put money on deposit and earn this much. You with me? I haven't told you there's any extra investment. So, we can't put it on deposit, otherwise I would have told you. What would you do? What would happen to the other 500? Inflate. Where am I inflate? Come on, some of you should know the answer. Well, the answer is quite simple. Do remember that 8,500 available, what it really means is we can borrow 8,500. Because, clearly, it could genuinely be, you know, you're able to borrow 8,500, or it could be, even if the money's in the bank, even if I've got 8,500 sat in the bank, that money is effectively borrowed from shareholders. They are entitled to it as a dividend. You agree? Obviously, we don't normally give them it all as a dividend because we invest in projects, but it is shareholders' money. So one way or another, you are borrowing that 8,500. You're either taking a loan or you're using shareholders' money and you're borrowing it from them. Clear? So now tell me, we can only invest 8,000. What will you do with the other 500? Don't borrow. Yeah. Why on earth will you borrow money? The only purpose in borrowing money is if there's somewhere good to invest it. If there's nowhere else to invest it, you do not borrow that 500. Or, as I said, if the money's already sat in the bank, give it back to shareholders. Pay it as dividend. Think about that. It could be important in other places. Any cash of the company, it belongs to shareholders. The reason you don't normally give it them all as dividend is because the company's investing it. But if you've nowhere to invest it, the company shouldn't be keeping it, if you see my point. All right? So, I only mention that, don't waste time in the exam, but it's quite likely to have you do the numbers, then ask you about that. Only 2 marks, but even so, if you've understood me, it's an easy 2 marks. Clear? Finally, a little bit of terminology. I've scribbled at the very bottom of the page. Very, very, very often when he does ask capital rationing, one of the written bits is effectively asking you to explain hard and soft capital rationing. All it means, this company's only got 8,500 available. There are 2 reasons that could happen. The most obvious reason for being limited to 8,500 is that that's the maximum you can borrow. Well, if that's the case, we call it hard capital rationing. Hard capital rationing, it means we cannot borrow more. Simple as that. You know, that lenders will only lend us 8,500. Therefore, we're limited. Are we clear? That's hard rationing. The other reason, though, in real life, is more likely. Most companies don't borrow everything they could. What I mean is, lenders might be prepared to lend us 20,000. The company's decided, for whatever reason, they're not prepared to borrow 20,000. Perhaps they're worried about the interest rates and things. And they've set their own limit. They've said, even though we can borrow more, the most we're prepared to borrow is 8,500. Well, in that situation, it's called soft capital rationing. Soft capital rationing is where you can borrow more, but company has set its own limit. Now, it doesn't affect your numbers at all. The numbers don't change. This is only for the written. But as I say, that in real life is more common. I know I'm a tiny company. The same thing applies to most. I'm sure if I went to the bank, the company could take a loan. They probably wouldn't lend me much, probably only 2,000 or 3,000 maybe, if I'm lucky. But just because they'll lend me 2,000 or 3,000 doesn't mean I'm automatically going to borrow it. If I need to borrow, I might say I'm limiting myself to 500 or whatever. But if a company sets its own limit, it's soft. It ultimately limits when you can't borrow more. It's fine. Okay.